All right, let's talk about trading gold during those absolutely insane news events. You know the ones, CPI and NFP. If you go into these things just guessing, it's a complete recipe for disaster. What you need is a playbook. And today, that's exactly what we're going to break down.
And look, this right here, this is the entire problem in a nutshell. When you jump in on a news release, you're not just trading against other people. No, you're up against incredibly fast algorithms, and their one and only job is to sniff out your stop loss and take your money. They feed on that initial chaos.
You know, for most people, these big news events turn the market into a giant casino. You've got flashing lights, prices flying all over the place, and everyone's making decisions based on gut feelings. And just like in Vegas, the house, the algorithms, almost always wins. So what if we could flip those odds? And this right here lays it all out perfectly. On the left, that's the casino method. It's all about guessing, making emotional calls, and yeah, getting hunted by algos. It's pure gambling. But on the right, that's the playbook method. It's about waiting, looking for logical reasons to enter, avoiding the traps, and keeping your risk under control.
So what's the antidote to all this gambling? It's what we call the wait and strike playbook. Think of this as your way out of the casino. It's a strategy built on patience and precision, not luck and a prayer.
The whole idea is actually pretty simple, but it's incredibly powerful. We literally sit on our hands and let the first wave of chaos happen. We let the algorithms trap all the gamblers who jumped in too early. Our job is to just watch. And only when the dust settles and we see the real direction, only then do we even think about striking.
Okay, so this whole playbook, it really just boils down to 3 very clear steps. First, we map out the battlefield before the news. Second, we have to survive the most dangerous 5 minutes. And third, we wait for a very specific confirmation before we pull the trigger. Let's dig into each one.
All right, let's get into the nitty-gritty. This is your step-by-step plan for actually putting this whole theory into practice in the real world. So step 1 is all about what you do before the chaos hits, when everything is still quiet. You're going to draw a box around the price action from the last few hours to see the range we're stuck in. Then you mark out the big obvious levels, and here's the golden rule, you guys. For 30 minutes before the news drops, you are hands off, period. No new trades. And then, boom, the news hits. The single most important number to burn into your brain right now is this one, 5. For the first 5 minutes after that news comes out, your job is, well, it's to do absolutely nothing. You let the chart go completely bonkers. This is where you see gold spike up $20 and then crash down 30 in a matter of seconds. That's the trap. Your only goal is to not be in it. So why 5 minutes? What's the magic here? Well, first, like we said, we're dodging those algo traps. Second, it gives us a moment to see where the big institutional money is actually placing its bets. And third, it lets us take a quick peek at the S&P 500. If that's tanking, it's a huge fear signal, and that's usually rocket fuel for gold. Okay, so you've survived the 5 minutes. Now you're on the hunt for your trigger to actually enter a trade. And that trigger is super specific. We need a full 5-minute or 15-minute candle body, and I mean the body, not just the wick, to close completely outside of that box we drew earlier. And this slide just shows it perfectly. Look at the left, that solid candle closing outside the box. That's our green light. That's the signal that the real move might actually be starting. Now look at the right. See that long wick that pokes out but the candle closes back inside? That is a classic fakeout. It's a trap, and our rules tell us to just ignore it. Okay, so having a plan is awesome, but we all know the market doesn't always play nice, right? We need rules for when things get messy or just don't go according to plan. This is all about managing risk in the real world. So what happens if the news comes out and it's kind of a dud, like it's exactly what everyone expected? You'll often see a quick spike that just immediately fails and reverses hard. We call this the rubber band effect. So when that breakout attempt fails, our playbook actually flips. We're not looking for a trend anymore. Instead, we're looking for what's called mean reversion. Price acts like it's attached to a giant rubber band, and it often snaps back with a ton of force, right toward its daily average, the VWAP, which basically acts like a magnet. Now, no matter what scenario plays out, these next rules, they are completely non-negotiable. Seriously. First, you have to cut your trade size, at least in half. Gold moves way too fast. Second, you have to use wire stops to give yourself breathing room.
And finally, you must, I mean must, follow the one and done rule. And here it is, the one and done rule. You get one shot. That's it. You take your one trade based on your plan. If it works, fantastic. If you get stopped out, you're done for the day. You close your laptop and walk away. This one rule will save you from that awful, destructive cycle of revenge trading. So you've got the strategy, but how do you actually pull this off when the pressure's on and your heart is pounding? Well, this is where technology can really give you an edge. Let's look at how you can use a platform like TradeOS to put this whole playbook into action. The workflow is actually really straightforward. First, you just mark the news dates in your TradeOS calendar so you're never caught off guard. Second, you use the tools to draw your pre-news box. But here's the cool part. You can set an automated alert for that candle close trigger, letting the system do the hard work of watching for you. TradeOS AI can even help suggest the best size for your box based on recent volatility. And finally, you execute your plan with those strict risk rules we talked about. So there you have it. That's the playbook. It's all about making that shift from being a gambler hoping for a lucky spin to being a patient hunter with a precise plan. And it really just leaves you with one simple question to ask yourself the next time a big report is about to drop. Now that you have the playbook, are you going to trade the news, or are you going to let the news trade you?